Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day recap for Wednesday, September 15th. Middle of the month, we are at this point in September. And risk disclaimer in front of you, everything that we're going through here is for information purposes only. You could read through the whole risk disclaimer here. If the screen is a little bit blurry, it is just because YouTube takes a while to render my videos and I send them out probably a little bit too early, so just be patient and close the video and reopen if that's the situation that you see on your screens. So theme of the day, impressive bounce. We finally, I think, got a couple things, an oversold bounce. Also, we're kind of just, seems to me, cycling through a dip in the market. And we've kind of covered this all week long in terms of, the market goes up, the market goes down. And, it cycles through, especially through some of the weaker time periods of the year as September is, which everybody knows that at this point. And then for me, it's just kind of checking off the boxes whenever we get a little bit of volatility. And up until now, I'm not certain, like 100% certain, that we're not going to see any more volatility for the rest of the month, because this is just a volatile month. So we've certainly highlighted that a couple times too in videos this week. I've talked about how September and October shaped up last year, and we kind of had some back and forth price action there too. So, all in all, I'm going to go over the technicals, but let me go over the performance first for the day. S&P was up 80 basis points, a little bit over 80 basis points. The Nasdaq was also up about the same. Nice outperformance came from both the small caps and the micro caps. They were both up about 1%. Bonds were a little bit weaker for the day, so yields up just a little bit after that big move up in bonds yesterday. They gave back some of those gains, and then the VIX. The VIX was kind of interesting yesterday. It kind of stood out to me that the VIX didn't get back over 20, and I was thinking, well, I think that's a pretty good sign for the market, but it was tough to tell, because when you looked at the chart as we did yesterday, it was a couple inside days, and you could even argue that today's another inside day for the VIX, but it does look like it's kind of heading it's heading back down, and it's back almost below 18. So, again, I still kind of leave the month open to any possibilities, but you have to like what you saw today, and the setups were really nice. So we're going to go through some of those single stock setups. Let me just talk for another minute about the indices. There's a couple things, as I've been going through these videos every day and talking about, different levels that needed to be kind of taken out, or that had a possibility of being taken out. Number one, this VPOC, right, that happened earlier in the week, we took this out. Notice that we really didn't go much lower than that. You had a couple of these candlesticks here that the wick was really long, so we did explore a little bit lower levels, and I talked about this in yesterday's video. Just give Thinkorswim a second to adjust here. Let me just make sure I'm on the right time frame. I am. But if you go back to yesterday's low, right, there was this 5-minute VPOC, right, that I made reference to. Again, you just kind of have to wait. There it is. Bang. We went from one VPOC to the other yesterday, and this was kind of lingering for a little while. So that did mark the low for the S&P for now, right? So short term, that was the last level to be taken out, and that's all the way from, see if I can get this to come up on the screen. Oh, let's see. Thinkorswim doesn't like when I do this. Let's see if I can get back there. All right, all the way back from there. Sorry, this Thinkorswim is going to jump around. But yes, so that needed to be taken out. Now, the other thing that I want to point out here too is that we're just about getting out of this pattern. What has been the pattern that I've talked about, since we started to make this move down, right? I've talked about lower highs, right? So here's the first lower high, second, third, fourth, a little bit lower high, and then it looks like we're getting out of this pattern. Now, I have another level for you to watch. So first of all, 44.91, which is another 16 handles up, so we could rally up to here, and maybe it gets rejected there. Also on the daily, and again, it's short term. It's we're talking 1 hour time frame. I think this one's even more important. This is where we hesitated both Monday and Tuesday of the week. Right at this 44.77 level. Right, so 44.77. Notice that's as far as that we went today. So that is a good level to watch for the rest of the month. If we happen to have like an inside day tomorrow or something to that effect, I would still keep a very close eye and write that level down. 44.77 is a level that we need to get back above. Now, again, Rome wasn't built in a day. I say this sometimes in my videos. So I think for today, like really good price action, and taking profits into this type of price action. I still think, and I've said this all month long, but not being super greedy with some things. Right, you could keep some trades on, but stock trades are a little bit easier for me to kind of keep on because I can manage them better with a clear stop. It's a little bit harder to do that with option trades, and I do trade both. But taking for some trades that you may have been in for like a short-term trade, it's okay to take profits in some of these things, right? Given today's price action. So that's the way I kind of approach today. I will go through all my trades as I usually do, so that you could see exactly what I did. But yeah, taking profits is an important thing for me. Nasdaq, I just wanted to highlight this too because I talked about it in yesterday's video. I was saying I wasn't sure if we were close enough, right? We got very close to this virgin point of control a couple times during the week, right? And we didn't take it out. We did today. We did this morning. We had that last move. We were actually talking about that in the trading room this morning, and I said that, hey, well, we finally got this. We finally got that thing off, and sure enough, we bounced. And again, if you're not familiar with the concept, right, VPOC, Virgin Point of Control, it is where a lot of buyers and sellers previously met up. Price loves to go back to these levels. It's almost like filling a gap, right? A lot of technical traders are familiar with like, hey, there's a gap up on a name, and when there's pressure in the overall market or in a particular name, sometimes we come back and price that gap gets filled, right? And then we resume like moving back up, or to the downside if the gap happened to the downside. It's the same type of methodology with a virgin point of control. Price seeks out these high areas of volume where a lot of buyers and sellers have previously met. It revisits it, and a lot of times does a nice reversal, like you see there, right, off of that. And that's why they're so important for me to watch, especially in the indices, but we also look at them in individual names to take targets. But they just come into play, so many times, and it kind of helps you too when you know that these things are kind of lingering down below, in terms of like how much risk that you want to add, knowing that this thing still had to be taken out. And the same thing with the with the ones that we were talking about all week long and last week regarding on the in the S&P. So again, it really helps, for risk management purposes, as well as where to take to help take targets. All right, so that's my analysis on the S&P. I think really that S&P level is important. I actually traded a little bit of the small caps today. Notice that they rallied right up to basically the bottom of value. So again, I think good enough for a one-day bounce. We'll see if we get any more than that. I sold my IWM. That again, I was just looking for a bounce. I do think that the IWM can bounce further after being oversold. But again, I just had better trades that I thought were in my mind are better set up. All right, so let's go over, before I go over my trades, just to note some of the best performers. I always like to look at the moves, especially from, what happened from the open. That was another thing, another pattern that we got out of, by the way, was we were seeing that the open was the highest, right? The highest level for the day, for the last 3 days. So we got out of that pattern as well, right? Obviously, you could see these things, all went up. I could actually put these all in. There we go. In green, and that means that we basically rallied after the open. Again, we haven't had one of those days in a while. So that, overall, that's great to see. What did well today? A lot of the material names did pretty well. Energy materials, steel names, those actually did very well. And it's pretty crazy. Just to talk about, energy, which I find a difficult trade. And I'll tell you why I think it's a difficult trade. Because look at the XOP. So XOP is the equally weighted oil and gas ETF, right? So like Exxon and Chevron get the same weights as the smaller names that are in the index. So for example, if you want to look at XOP here just for a second, and look at the weighting. Right, you got AR is actually a CLR, COG. These are all the nat gas names that have been rallying really well. You could see these make up the highest weights in the ETF, even though the ETF is equally weighted. And this will be one of those ETFs, by the way, that gets reset back to equal weight on Friday. But you could see, and then there's some other names that have been underperforming that are less. And again, the variable is price, right? The last time that this equally weighted ETF was rebalanced was in June. What's happened since then? Well, names like AR, CLR, or COG have rallied more than any of the other energy names, and therefore are a larger weight. Right, that's how it works. Nevertheless, what was tricky about this is a big bearish engulfing bar yesterday. Right when this thing looked like, and I even put a chart on Twitter saying, "Hey, this kind of looks like a little bit like an inverted Head and Shoulders," and then the whole thing gets slapped down yesterday and closed on the lows, and you have an outside bearish engulfing candle. So sometimes with these candlesticks, right, as long as you're holding the trend. That's my opinion, right? People really look and read into candlestick patterns, right? This, again, being a bearish engulfing candle, it covers, it engulfs the previous whole body of the previous day. But the price did not lose the 5-period moving average. And that, in my opinion, I give that more weight than just the candlestick pattern alone, but very impressive, right? And again, you have to look at what oil's been doing. Oil did now move. For a while, this was stuck inside value, the September value area, and now has moved up. And of course, nat gas has been super strong. While we're on the material space, a lot of the I mentioned the material names, but a lot of the agriculture names did pretty well today. But yeah, I mean, nat gas has been on an absolute tear. This Mosaic made a nice move today, and so did a few others in this space. Bungie was another one. I love the chemical space. So I actually put this in the TTG trend portfolio today. We made some substitutions in that portfolio today, but I like this Olin Corp. All right, so that's just to kind of go over some of these best performing groups for the name. ATKR also had another really nice day. That is kind of forming this kind of triangle pattern or wedge, I would say, at this point. We'll see how this develops. It's a name I've been watching. STLD had earnings today. Why won't Thinkorswim let me put this line here? That's frustrating. Come on. Oh, now it lets. So anyway, I'll have to take that. Remove that, and I'll draw that another time. STLD had earnings. So let me get into. I didn't really trade much of that group, but let me get into the trades that I was involved in today. So Crocs was the first one, right? Just got off to a nice start today, nice continuation. We talked about this in yesterday's video. I went into this one, made some money and made a little bit of money in some calls. I kind of re-added in the weakness this morning, and was not a huge trade, but it worked pretty well. IWM again was not a huge winner for me. I took this trade off just because I saw some other names that looked pretty well. Another trader in the Tribeca Trade Group mentioned the the setup in Dick's Sporting Goods. What I like about Dick's Sporting Goods was this name, had a huge gap on earnings and then continued to run for about for a little bit more than a week after, and look at where it kind of fell back into, right into the 20-day moving average. So nice move today. It was up $3 today, over 2%. Has to deal with a little bit of resistance, but I like the spot of where this thing found support. So nice move there. And a few other names too that I wanted to highlight. Asan, which I'm not in this one, but really strong. More highs. It kind of looks like this one as well. This one I was in. I did take profits in this one. DigitalOcean, what a monster. I was joking around on Twitter because, hey, I was like, did you see the pullback that this thing has? What pullback, right? And that's what some of these names have been doing, like the Asan, DOCN. That's called relative strength. When the market's pulling back and these names aren't, really strong looking. Another one too, which I think is going to be an interesting one to watch for the rest of the week, is Upstart. Right, so Upstart has been on this huge run from 160 to 294, but notice how it's consolidating in here, right? So if you're not familiar with my videos or familiar with my trading style, I am a trend trader. I look to continue to buy things that are in trends, especially when they digest, you hear me say consolidate a lot. I love to go after names that are consolidating in an uptrend, right? So we don't know if we're going to see this come all the way down to the 20-day moving average. Strong names just don't do it while they're trending. So I think this has a good chance to kind of move higher for the rest of the week. Very easy level to watch. So this is on the 1 hour chart. 1 hour chart, you get a value area for the whole week, right? So I would watch this it's 279.25, but I would round up to 280, right? Notice it had a little bit of trouble with 280 earlier in the week, both on Monday, Tuesday, and it's approaching that level. But I think if it can break out, I think it's off to new highs for Upstart. So very strong with this name. A couple other areas in the material space. I'm still long tech resources. I'm trying to stay long this thing. Now that I've taken multiple targets, there's a VPOC. I'm going to try to shoot for this 28.72 VPOC for the last piece of the trade. We'll see if it if it works there. Speaking of high flyers in the material space, this tweet that I sent out didn't really get much attention. But the uranium ETF's largest one, they've been seeing inflows for the whole month, but they actually had the biggest one-day inflow on record, both of them, both URA and URNM, right? You could see that on the bottom of your screen. That's an actual inflow into the ETF. So both of these, one had 74, the other one had 40. That makes $274 million of inflows into these little ETFs that track uranium, right? That's a big move. That's a lot of money that's going into these things. So I got along a little bit of this single stock cheap name UUUU. It's almost at this VPOC, which is my ultimate target for that. I took a couple targets and some calls, but I'm still long the URA. I took a healthy target at this last VPOC takeout, and I'm looking for the next one up at close to $30, $29.97. All right, for the uranium ETFs. All right, a few other names that I thought interesting. We've talked about this name a couple times in the room. Encino, NCNO. Again, another name that popped on earnings, has been consolidating, right? Look at the volume on the consolidation, low volume. I think this takes out 78.53. Another name that, so we talked about that name a bunch of times. Look at this move in Sentinel-1, right? Same type of story, just like I mentioned in Dick's Sporting Goods. Look at where this thing kind of fell back to after earnings, right into the 20-day moving average. Right? It's a nice place to try a trade. And in trading, you want to keep things as simple as possible, right? So entry on the 20-day moving average and put your stop right below the 20-day moving average. Keep it as simple as possible. Try not to overthink things. There's too much noise out there with, listening to financial media about, doom and gloom and so forth. And you don't have to be super bullish either. All you're looking for is, for the chart and the price to go from point A to point B, right? Or if you want to try to get point C and D, taking targets too along the way, that's super, right? And you know exactly where, you know, where you're going to get stopped out in this trade if it breaks the 20-day moving average, in my opinion. That's it, right? And you just have to do the work and the homework, which we do for members, right? To find some of these setups, right? And this was actually somebody brought this one to my attention. Although I did have an alert set on this one too that triggered at the same time. So really, really nice move for this one. Other trades. So here, you could see the Sentinel one, DXEM. How could I forget this one? Right? Another one that really hasn't sold off at all this week, with a little bit of the pickup in volatility. And again, touch back to the 20-day moving average and strong again. MDB is another one too. What weakness, right? This thing looks like it might be pushing out to new highs. A little bit of a move, back into the 5-day moving average, and there it went. So very strong there as well. I think we covered most of the names on my list here. Twitter saw big call activity, but my opinion with this stuff is, sometimes this option activity, it kind of warps our minds a little bit. Why? Because, well, it was nice. It was up 2.7%, but we don't know why they're buying calls, out in October. I think there's a lot of better looking setups than Twitter. Now, Twitter has to get into, so it had a nice move for the day, but it's got to retake value, which is right around $62. So maybe it will do it, and maybe it starts, a bigger move, right? And you can kind of use that into your process. But I would say if this thing, let's say tomorrow, this thing gets into value, right? And maybe gets up to 63 and a half. And then the next couple days, it falls back below the 200-day moving average and out of value. I would be out of the trade. I don't care what the option activity, how big and how great the option activity is. Why? Because a lot of times that gets traders into trouble. Instead of following their system and being disciplined, they don't take the trade off because they're like, oh, but all those calls hit the tape, so they must know something, right? And that's how you get a big loss on your hand, right? So many other trades and setups that we're finding that you don't need the option activity to get you into the trade or to be less disciplined. So I would keep that in mind. I thought this one was also interesting. It does help. I will admit that the option activity does help. I just think that there's an over-reliance on it based on what I see on Twitter. Docu was a nice one. Somebody actually asked me in the room about Docu yesterday, and I said, well, let's see if this VPOC gets taken out. Lo and behold, the VPOC gets taken out, and somebody bought some calls, some next week's calls in this one. Nice bounce in this one. Maybe this one has some follow-through tomorrow. All right, last couple ones here. How could I forget Apollo? Right, real nice move. This was a name that I was watching. I love the private equity names. All you have to do is look at this BX Rockstar. We've been long this BX Blackstone in the TTG trend portfolio for a few months now, back before it had earnings. Somebody told me back here, oh, it's extended, you should sell it. Yeah, that was at 99. It's up 34% since then. Remember, somebody asked me this morning too. They're like, "Hey, where do you think this name's going to go to?" I'm like, I don't know. Nobody knows how far a name is going to go to, right? What you do is you follow the trend, and once the trend breaks a little bit to the downside, then you get out of your position, right? You have to come to terms with you're not going to get the very high of the name, right? You're going to obviously we could take some profits along the way, but no one knows when the trend in a stock is going to stop, right? You just have to be okay with knowing where you're going to sell it. On the break of a 20-day moving average, that's usually where I would get out of things, right? Where it doesn't bounce, right? And of course, if you've locked in profits along the way, you're in good shape, right? So I like this APO a lot. Nice power bar there and moving out of consolidation. Another name too out of the FANG group is Twitter. Sorry, not Twitter, is Google. Google had this one big nasty red day, the day that the Apple news came out about that case, and it brought Google down with it. Notice that that was actually a buying opportunity, and made a nice move today and is back above all the short-term moving averages. All right, guys, so that's it for today's video. We went through a lot of names here. Again, one day is not a trend, but a lot of boxes that needed to be checked were checked this week for a bounce and possibly a turn back higher. Bottom line, I would watch that level in the S&P, and we'll watch to see also, if we have some nice breadth continuation, right? We had strong breadth today. Let's see if we get that tomorrow. Good luck, guys. I'll see you tomorrow.